Did you know that the market cap of Reliance Industries is more than the GDP of 100 countries worldwide? On the other hand, the Tata Group is one of the largest employers in the country, fostering economic growth. Indian conglomerates like Tatas, Birlas, Jindals, and many more form a considerable part of our lives in one way or the other. We have used their products, aspired to work with them, or even wished our grandparents had invested in such companies. Times have changed, and today we have a new way to invest in companies of such impactful conglomerates with as low as 5,000 rupees via mutual funds. To enlighten us about the Tata Mutual Fund's first of its kind fund, the Tata BSC Select Business Groups Index Fund, we have with us the head of product from their team, Ms. Shelly Gang. I am super excited about diving into the world of mutual funds, knowing about what makes this NFO unique, and ending the session with a fun rapid fire round. So without further delay, let's get started. Hi Shelly, thanks for joining us today. I'm so glad to have you here and learn from you.
It's my pleasure, our pleasure, Komal. Thank you.
I'm really excited to know about the Tata BSC Select Business Groups Index Fund, as it's one of the first in the market. It's something new that is coming in the mutual fund space. And why don't you start with the inspiration behind it and how does it differ from any other large cap funds or index funds?
Yes, it's an industry first. The thought behind it was, to have avenue for an investor which he can consider from a very, very long-term perspective. Of course, equity investments are for long-term, but think about it. Let's say if you're invested into companies and those companies, are around for the next 20 years, and that's what you feel, and you also stay invested for that long, 15 to 20 years, and the kind of wealth creation and compounding that could happen while the portfolio is itself encompassing the top business groups of India, doing a lot of work across various sectors and harnessing future opportunities as well. So that was the thought, to have an avenue which some very strong, very robust avenue, which someone can think about it from the lens of 15 years, 20 years.
It's great to see a fund targeting something so unique and focused. The NFO tracks the BSC Select Business Groups Index. Can you tell us about the companies included in this index and how they are chosen?
So this index has top 7 business groups of India. This index includes top 30 stocks belonging to these 7 business groups. This index excludes financial services as a segment, as a sector. Now, that's because financial services, if it was included, it would have taken a lot of weight. In the other broad market indices, for example, financials carry a good 35-38% weight. So even in this index, if you would have included financial services, 30-35% weight would have been taken by financial services. And a lot of the other segments where these business groups are doing a lot of work in harnessing future opportunities as well, that would not have got so much space. Now, how have we chosen the top 7 groups? Once we excluded the financial services segment, then all the other listed companies which belong to these 7 groups are brought together. And at a group level, the free float market capitalization is calculated. The groups which are top 7 by way of free float market capitalization, they have been included in this index. And how does underlying stocks come in? So under each group, one stock is surely included because that's the largest stock of that business group. So 7 stocks are already in place. The balance, for the balance 23 stocks, what is being done is the list of all the stocks which are belonging to these business groups in the listed space. They are listed down in the descending order of free float market capitalization, and the top 23 stocks are taken.
Yeah, so what are the key benefits investors can expect from this fund, especially compared to the index fund? Like, how is it different in terms of benefits?
So this fund, the underlying constituents are, the business groups, which themselves are very, very diversified. These business groups have a lot of strategic diversification. Well, let's say they started with, as trading companies, and then slowly they expanded into textiles, steel, power. Then they brought in IT as a segment. And then currently they are, expanding into green areas or green energy, electric vehicles, e-commerce, and expanding retail. So they are across industries, and this index actually houses 12 sectors and 19 basic industries. For an investor, this actually becomes a very well diversified portfolio. Like I said, in other broad market cap indices, they would have a lot of weights to the financial services, but here that is one differentiation. So it's very, very well diversified, and the one chunky weight taken away by financial services is not there. So it becomes unique from that perspective as well when somebody looks at adding to the portfolio.
Talking of benefits, we would also like to know what are the risks that the investor can look at it, how they can mitigate it. Apart from diversification, what are the risks that the investor need to
So
mitigate?
diversification is a risk mitigant. It mitigates the risk. It reduces the risk because your revenue streams are diversified and it's coming in from various segments and businesses. This fund, as I said, because it is well spread across 19 basic industries and 12 sectors currently, it is as good as the risks would be, equal to or close to what broad market cap index fund would face, close to any diversified fund. So that's the market risk which it faces. That's it.
How do we measure the success of this fund? So, what benchmarks should an investor use to track how this fund is performing?
So, backtesting results since 2014, we've anyways put out in our communication. It has, outperformed Nifty 50 and Sensex both. So that, of course, is there. But I think more than that, it is about, what the DNA of the successful business groups do. And that is something which, the investors should pay attention to. For example, they do joint ventures with, other entities. They bring in overseas expertise. They do cross segment synergies. For example, if it is Tata Motors, then doing in partnership with Tata Power for, electric vehicles, charging infrastructure. And or if you say the group of Reliance is using AI and ML to do the quality control, to do predictive maintenance, to check for bandwidth congestion or to check for network congestion, to manage the speed, many things. So these are different segments, but the synergies between them is what these business groups, they are able to achieve. And also they are able to enter into and scale up in many emerging areas, as I said, electric vehicles, manufacturing of electric vehicles and charging infrastructure. On the energy side, they're scaling up on generating renewable energy, and energy storage is a very big discussion nowadays. Grid management is another piece, because whatever you generate, you have to, in a very optimal manner, transmit and distribute to the end consumers. You have digital services, a lot of digital platforms. From the Tata Group, you have Tata Neu, Tata Pay, Tata Click, Tata Health. From the Reliance side, you have, JioMart, so Jio platforms, a lot of things. And on the OTT side, you have Jio Cinema, Jio TV. So you have an entire digital, services stack, which is there, which is where they are doing a lot of work. They are also doing a lot of work on expanding of retail and lifestyle. Under Tata's, you have Trent and Titan, and you have under the Adani Group as the largest port operator in India. So they are doing a lot of work on, expanding the port and airports infrastructure and creating more. Also doing a lot of work on the optimum utilization of the capacity there and reducing tax there. So a lot of work happening, by each group. And harnessing into these areas and capturing them early would surely show onto the profitability. And that is where I think the investors should, pay their attention to.
I think that's pretty compelling. But if you had to summarize everything in just a few lines, like an elevator pitch, what would you say to convince someone about this NFO?
I think this is Build India NFO. You have the largest groups of India who have the DNA of visionary leadership, who are an ecosystem in itself. So imagine you are investing into 7 ecosystems in itself. It's like that, which are each component of the ecosystem is helping each other and scale it up and operate in a very, very optimum fashion. And the DNA of each of these business group is strategic diversification, visionary leadership. You have innovation, adaptation, and early identification of technology and trends, and adapting and adopting them as well. You have joint ventures and partnerships, which they enter into and bring in expertise. They also have enablers like talent pool and incubation centers for design, for research, for process management, and everything, which enhances and finally feeds into the operations of the group. So if you have all of this available as a DNA of each group, and then wherever they are expanding, investor is getting to invest into this DNA, which should finally result into profitability.
I think that's beautiful. Thank you so much for breaking that down for us. I think clearly the Tata BSE Select Business Groups Index Fund is carving out its own space in the market. I don't have any more questions on the NFO. We can move to the next segment of today's session, rapid fire round, which is better for wealth creation, patience or risk taking?
Patience. It would give you a lot of compounding.
Biggest misconception about mutual funds?
They are very risky. They are in themselves pack of companies. It's not a single stock. They are they're spread across 40 to 50 stocks on an average.
Mutual funds boring is beautiful. True or false?
Absolutely true. It's like watching a plant grow. And of course, it takes time. It could be glaring at the plant, could be boring, but finally, what you get is beautiful.
Analyze 50 stocks or compare 10 funds?
Of course, compare 10 funds. Each of those funds would have at least on an average 40 to 50 stocks. So, and it's professional management attached to each of these funds. So I would diversify amongst the judgment of those 3 or 4 funds, which I pick from analyzing 10 funds.
One thing stock market investors can learn from mutual fund investors?
How not to ride on just few things, how to spread out and diversify amongst multiple holdings.
I think that's a beautiful answer. The last question, a legendary question: SIPs or lump sum?
Both. SIPs every month diligently keep lump sums ready for some windows which will keep coming in between to give longevity to the market. These some corrections which come in between, they do give a lot of longevity to the strength of the market, and one should utilize that by putting in lump sum as well.
I think that was fun. Thanks for being a sport and also for telling us everything about the Tata BSE Select Business Group's index fund.
Thank you. I thoroughly enjoyed. Hope your viewers like it too. Thank you so much.
Thank you so much. We hope you found this video insightful. And if you wish to explore more about the Tata BSE Select Business Group's index fund, check out the link in description. Mutual fund investments are subject to market risks. Read all scheme related documents carefully.